Chaliye guys, we'll start away with the lecture. Till question number 28 we all have done. Question number 29 we will be starting. This is slightly actually different kind of a question only. IC should have never ever asked it. They messed it up because some information was not given. So let's start, and there are two questions like this. They messed it up 2 times actually. Okay, so let's start question number 29. Now this is all on variable overheads and fixed overheads combined. Okay, this is all on that particular thing. Listen. The overhead expense variance, the overhead expense budget for a factory producing to a capacity of 200 units per month is as follows. Description of overheads, fixed overheads per unit. Now those guys have given 4 categories of fixed overheads: power and fuel, repair and maintenance, printing and stationery, other overheads. Okay, in all this is 3000. Now this is budget. Okay, so therefore this is 3000 per unit, 3000 per unit. Further, variable cost per unit. So power and fuel has 2 components. One part is fixed, one part is variable. They have added up to give you total also. Same thing for all the expenses. In all, in every question, I'm never ever interested in breakup of variable and fixed overheads. When I introduce your overheads wala part, that time also I told you that overheads is not an expense, it is head of expense here. We compute all the things together only. Okay, so therefore variable overheads should have been 1500 per unit, 1500 per unit, and then total cost is given to you. That's okay, I'm not much interested in that. Further, the factory has actually produced only 100 units in a particular month. Details of the overheads actually incurred have been provided by the accounts department and are as follows. Okay, description of the overheads, actual cost, power and fuel 4 lakh rupees. Now tell me one thing, power and fuel had 2 components, right? One is fixed, one is variable. As per you all, this 4 lakh rupees is a fixed part or is a variable part? I think must be combined part, right? Okay, they have given you power and fuel, so I think it must be combined part. So therefore you all can write down this is variable plus fixed. Repairs and maintenance, printing and stationery, and other overheads. Just total them up and write down the total over here. Comes to how much? 11,50,000. Okay. You are required to calculate the overhead volume variance. Okay. Now, we all have done fixed overheads also. We all have done variable overheads also. I'm asking your volume variance comes under fixed part or variable part or both? Fixed part. So, you all can write down on top of overheads. If you can write down a complete thing, must be better. Must be fixed overheads only. Must be fixed only. Because volume variance comes over there only. Must be fixed. And overhead expenses variance means overheads expenditure variance. Now tell me, expenditure variance comes under fixed part, variable part or both? Both, no? I guess under variable overheads also our second variance is nothing but expenditure variance here. So you can write down on top of your overheads only fixed plus variable. And we'll do one charity work also. In fact, I think that IC should have asked that particular thing only. And total overhead cost variance. Now see, we'll start away with the question. Now this is the only time in your entire book I have put a question mark like this. Okay, this is the only time actually. And same kind of a question mark I have put in your this question also. So once I do question number 29, you can start to be doing question number 31 also. Okay, listen. Now we have been asked in this case to find out overheads volume, that is fixed overheads volume, overhead expenses, that is your total variable overhead expenditure plus fixed overheads expenditure, and total overhead cost variance. Okay. Now, to the extent possible, I am trying to explain how you all know your things. So, in your notebooks, you all write down variable overhead variances. So, given standard, revised standard, actual. Leave one line, hours rate amount, hours rate amount. Leave one line, write down total variable overhead cost variance. Leave one line, second, variable overhead expenditure variance. Leave one line, write down variable overhead efficiency variance. Now, you will do one thing. Tell me, variable overheads are dependent upon what factor? Output. Okay, so write down over here output. Can we say we always prepare revised standard for actual output, no?
Yes, sir.
You all read the question and tell me what was the actual output in this entire month. I guess this is the data for a month.
100 units.
100 units. Tell me how much I thought I will produce. 200. But we always prepare revised standard for actual output. So therefore, actual output was 100 units. Hence, revised standard will also be prepared for 100 units. Now, one thing, I do not require this breakup at all. Okay, we are trying to be computing variances of all the expenses combined only. Okay, so therefore, you all can write down over here breakup not relevant. Breakup not relevant. Now, I only want one number from you. And honestly, out of all 1, 2, 3, 4, 5, 6, only one number is possible only. You try to tell me which number is possible and that number is what? Just a sec. 1, 2, 3, 4, 5, 6. So that you all can speak, I am writing these numbers. You all don't write. Tell me which is the only number out of all these 6 numbers which is possible to find out. Think before you will reply. There is only one information that you can find out actually. 6. And that's how much? Obviously, you can't find out 6, so don't try. That's wrong. Okay, I'll start. Now, variable overheads. Can you all shout? This is variable overheads. What? This is variable overheads? Per unit. It is not per hour. Can we say the rate that comes over here is per hour rate, no? Beta, these are hours. These are rate per hour. And this will be amount. Correct, no? So, therefore, obviously, this is rate per hour. But that figure that is given to you of this 1500, this is not rate per hour. This is what here? Rate per unit. So therefore, if suppose I have to try to do some time pass, which I am planning to do just for next 1 minute, you can write down given standard for 1 unit. How many hours should have been taken? I have got no damn idea. At what rate I should pay the workers? I have got no damn idea. But yes, one thing I know, for 1 unit, variable overhead should have been incurred to the extent of 1500. Everybody tells me, is 1500 okay?
Yes,
for 1 unit, variable overhead should have been 1500. I don't know the breakup of this at all. Okay, I have got no idea what is the breakup of this. But can we say, even if suppose I don't have this, I will not get this. Even if I don't have this, I will not be getting this. But you all will understand, if I have this, at least I'll be able to get this data, no?
Yes, sir.
Okay, so in this particular case, so put question mark. For 1 unit, we should have incurred 1500. For 100 units, I should have incurred 1,50,000. Now, I am asking you all, think further before you will reply. Do you have actual hours in the question? Read. No, in fact, there is no information of hours in the entire problem only. There is no rate per hour. And you all will understand, can I write down 11,50,000 over here? No, why? There is a combined figure. Okay, so what I am saying, out of 11,50,000, let X rupees be the variable overheads portion. So write down X over here. Done?
Yes.
Listen, total variable overhead cost variance. How much you should have incurred, how much you have incurred. Okay, so therefore 1,50,000 minus X. I need not put this bracket also. Then variable overhead expenditure variance. I am writing down the formula. Standard rate minus actual rate into actual hours. Now, you all will understand, I don't have this beta, I don't have this, I don't have. So then what you will do, write down all question marks. No, I'll open the bracket and I'll try to do time pass. Okay, so do one thing. On the same line only, if you all can, write down standard rate into actual hours. I'm just opening the bracket, this into this, this into this. Minus, you all speak no further, minus actual rate into actual hours. Now tell me one thing, out of the first term and out of the second term, think which term at least you can write down something, might not be some number. Are cartoons? Actual rate into actual hours will be this particular figure, no? Okay, so first term I leave it off like that only because I cannot be helping it. So standard rate into actual hours minus X. Now, variable overhead efficiency variance. It is this figure minus this figure into this. So therefore, standard hours minus actual hours into standard rate. So first figure will be 1,50,000. Second figure I've got, I don't think so any answer for it because I require this into this. I don't have here. I'll just let it be like this only. Job done. Now this is the best that could be done. Sir, how will we get marks out of it? But they have not even asked these particular things. Ultimately, your job is to be answering the question here. So my question was, in this particular case, you try to be finding out those things that these guys have asked. Their required part is over here. Okay. But one thing, whatever variances those guys have asked, it entails fixed overheads also. So let's start to be making fixed overheads. Now one thing, listen to me very carefully. Yesterday, we did breakup of volume variance into, I'll say that, gross capacity and efficiency. Gross capacity further had two parts. Which two parts? One was calendar, one was net capacity. Now, only for that information, you require the data of hours and days. If suppose you do not want to do volume variance, if you don't want to do the breakup of the volume variance, means you only want to be computing first three variances. Can we say for first three variances, only information that you will require is of fixed overheads and output, no? Yesterday you all did around 6 questions. Okay, try to see any question that you all want. For the first 3 variances, we only require information of 2 things. One is fixed overheads, other thing is output. You all understand this?
Yes, sir.
Yes.
You don't require the information of days, you don't require the information of hours. That information is required whenever you have to try to do the breakup of volume. Okay, one thing, your first variance is under and over absorption, is that okay?
Yes.
Your second variance is the difference of expenses, that is your overheads. Your third variance is the difference of output. So therefore, you only require that much amount of data. I'm only making that much amount of data and not the entire thing. Okay. So therefore, you all write down fixed overheads. So standard, actual. Now everybody will tell me fixed overheads are dependent upon what factor?
Period.
Period. In this question, your period is how much, beta?
1 month.
1 month. I guess this is the data in a particular month. So therefore 1 month. Then further, over here I am writing fixed overheads. Over here I am writing output. Now, obviously, if you are only going to be writing this much amount of data, there is only one absorption rate which we require and which we can find. 1 unit is equal to some rupees. Now, you all tell me this thing. Do you have actual fixed overheads in the question? Tell me that.
No, sir.
No. Okay. But can we say we have fixed and variable combined? Is that okay?
Yes, sir.
Okay. So, out of 11,50,000, obviously I have X. Okay. That is a variable part. Let the fixed part be Y. And everybody will understand this. Can you say X plus Y is 11,50,000, correct?
Yes, sir.
Okay, you all write down Y. Now, rest all the informations are there in the problem. Please find out. Once it is done, do tell me. That's easy part.
Done, sir.
Okay. How many units we thought we will produce in a month?
200.
200. We produced 100. Okay. And can we say absorption rate is given to me, no, in the question?
Yes.
1 unit should have been how much? 3,000.
6 lakhs.
So therefore, 200 into 3,000, we had thought that we'll be incurring 6 lakhs. Let's start away with our variances. Total fixed overheads cost variance. First variance is under absorption or over absorption. For that you require absorbed amount. For that you require actual amount. Okay, tell me absorbed amount will be what into what?
3,000 into 100.
3,000 into 100. I'll write down just 100 units into 3,000. So therefore this figure will be 3 lakhs. Actual amount I'm taking as Y. This is 3 lakhs minus Y. There's nothing more I can do here. Second. Second, fixed overheads expenditure variance. We should have incurred 6 lakhs. We incurred Y. That is the best I can be doing for you all. Third, in fact, this will be our only success. Fixed overheads volume variance. Can you say volume variance we will be able to compute, no?
Yes, sir.
How does your volume variance come? We should have produced how much? 200. We produced how much? 100 into 3,000 bucks. So 200 minus 100 into 3000. This will be how much, beta? 3 lakhs, no? Adverse. Lesser number of units, so fixed overheads per unit will rise. So let's try to see what great work we all have done in the question. So required part, required part, required part. So we have found out fixed overheads volume variance. Great work. Overhead expense variance, we have not done it. Total overhead cost variance, we all have not done it. But one thing I like to be doing now, that is total overhead cost variance. See, you all will understand. Can I say total overhead cost variance will be the merger of this particular variance and your this particular variance. Is that all okay for everybody?
Yes.
Now you all should be able to understand this thing without me telling you all this. You cannot compute variable overhead variance because you do not have X. You will not be able to compute fixed overheads variance because you don't have Y. But you will certainly be able to compute total overhead cost variance because you have X plus Y, no?
Yes.
So therefore, what my planning is, I will merge this variance and this variance. Whenever I will be merging these two variances, I will like to be thinking, sir, let's add their standards. So therefore, I have their standards 1,50,000 and 3 lakhs. And then I'll be merging, speak the next line, their actuals also. When I'll be merging X and Y, I don't have X, I don't have Y, but then X plus Y is 11,50,000. My job will be done, no?
Yes, sir.
Are you all understood this or not?
Yes, sir.
Okay, so that's what we are going to be doing right now. You all write down. Write down. We cannot compute. We cannot compute VOH and FOH variances separately as we don't have X and Y. Hence, we combine them to find total overhead cost variance. So you all write down first over here. Write down. Total overhead cost variance is equal to variable overhead cost variance plus fixed overheads cost variance. Okay. Variable overhead cost variance was 1,50,000 minus X. Fixed overheads was 3 lakh minus Y. Hence, we all merge their standards. Okay, so therefore, I am going to be writing 1,50,000 plus 3 lakhs. And then I will be merging their actuals X plus Y. So this is 4,50,000 minus 11,50,000, 7 lakhs adverse. Is this understood?
Yes, sir.
Okay. Now, next one is going to be a problem. Now see, out of all the works, no, if suppose, sorry?
How we go to that one?
Beta, actual figure is higher, no, boss. If actual amount is higher, the variance will be adverse only, no?
Yes, yes.
Now, out of the 3 works, we all have done 2 works now. Okay, I have done this, so congratulations. I have done this, so congratulations. Okay. And then you have overhead expense variance. Okay, now there is a problem. Let's see that problem. Obviously, your expense variance is going to be merger of this particular thing, and then in this case, your merger of this particular thing. Let's try to the best we all can here. Okay, so write down second. Overhead expenditure variance. That will be nothing but variable overhead expenditure variance plus fixed overheads expenditure variance. Now, variable overhead expenditure variance. So now I am highlighting these things in green now. So I'll require this, and in this case I will require this particular data. Okay. So let's do one thing. I'm writing this particular thing. This is standard rate into actual hours. Write down standard rate into actual hours. Minus x. This is your first variance. Then fixed overhead expenditure variance is 6 lakhs minus y. Now see, I say reach till here to be very fair to them. They all reach till here. So good work done. But obviously you all will understand we require still your answer here as such. Now, I'm asking you all, and you all should be able to tell me this. Think. Is this figure, think, equal to 1,50,000? I'm asking you all. Is this particular figure equal to 1,50,000? I'm asking you all. Yes or no?
No, sir.
No. Beta, it is actual hours. It is actual hours, this particular data, into standard rate. Okay, can we say this should be standard rate per hour? No? Is that all fine?
Yes.
Okay, but we do not have that information. Okay, IC should have given that information. That was the only information that I wanted here. You give me this data and this data. So therefore, I don't have this particular data. Okay. Now, if you don't have this particular data, somebody can be saying, sir, you only told, assume no. I'm okay to be assuming, but see, in standard costing, no, given a choice, we should not assume something as per me, like, which, like I'll tell you what those guys did, and without writing an assumption. I'm not against the assumption, but at least mention the assumption. What those guys had assumed that actual hours are not given, so therefore we assume actual hours to be same as standard hours. You all will understand that in case you assume that, then the question will be getting solved only. In case I assume actual hours to be same as standard hours, then can we say this particular data will become standard rate into actual hours, which we are assuming same as standard hours. So standard rate into standard hours will become 1,50,000, no? Okay, that indirectly also means that you are assuming variable overhead efficiency variance to be actually 0. But if you assume standard hours and actual hours to be same, even your variable overhead efficiency variance will become 0 only, no?
Yes, sir.
Okay, they all did not write down that assumption. I am not against in trying to make an assumption to solve the question, because in exams you'll have to be solving it, but it is mentioned that assumption here. So I'm giving you that assumption, because else this question cannot be solved further. As per me, if suppose I am the paper maker, I should not be asking such kind of questions, whereby you assume such kind of a thing that actual data is same as standard data, because it's all about variances beta, whereby performance is very different as compared to your actuals, and that's why you are doing this particular chapter. If in end we have to try to be assuming only that actual data is same as standard data, there is no point in computing the variances. But then my emotions have got no value in any case. So you all write down at least that assumption that those guys have not written. You all write down. Write down ICAI without mentioning assumed that actual hours are same as standard hours. My job is done. You all will understand. Now this question will be getting solved. Now you all tell me standard rate into actual hours, which are assumed to be same as your standard hours, will give you what number? You tell me a number, please. 1,50,000 minus X plus 6 lakh rupees minus Y. Job done. Merge the standards. 1,50,000, 6 lakhs. Merge the actuals. X plus Y. 7,50,000 minus 11,50,000 is equal to 4 lakhs adverse. Done, everyone?
Yes, sir.
Okay, this is your end of the question. Now whatever those guys had asked, actually we all have finished it. Total overhead cost variance you all asked, overhead expenditure variance you all asked, and those guys had asked you for overhead volume variance. In this case we all have done it. Just I am writing the answers once towards the end, so therefore everything is at one single place. You all write down first fixed overheads volume variance, 3 lakh adverse. Second, overhead cost variance or total overhead cost variance, then overhead expenditure variance. This was 7 lakh adverse, this was 4 lakh adverse. Now what I have written in shorts over here, this question is incomplete. It cannot be solved fully because of lack of data. I say I had done it completely wrong by making some stupid assumption which they never mentioned also. There will be another question like this, question number 31. So therefore you all do one thing first. Question number 30, no, you all leave two sides for that we will be doing shortly. But you finish off question number 31 exactly in the same way that you all have done this particular question. Okay, and there also you all can write down the third part, that is total overhead cost variance. Leave two sides for 30th question, finish off 31st. I'm giving you all 6 minutes. Please finish. Is it done kya? Is it done? Okay. Just let me know the answers please here. Question number 31 you all were doing, no? Just a sec. I'll mention the answers. That'll be better. Actual data for the month. Fixed overheads per month. 3 lakhs. Capacity. Actual. 15,000. Into 15, 2 lakh 25. Just a sec. Volume 20,000 minus 15,000 into 5 rupees. Volume variance is 25,000 it was?
Yes, sir.
Okay. Then overall cost variance will be 15,000, 2 lakh. 75,000 it was?
Yes.
Okay. This will be 50,000 adverse. Correct, no?
Yes, sir.
Okay. Please everybody work it out fast here.
Done, sir.
Done. Giving a minute for those people who have still not done. Please, when everybody keeps on doing, you all can tell me it is done. If everybody is done, then I'll not waste time. Is it over?
Yes, sir.
Okay. So those people who have replied, it is over. That is now the sample of everybody. Listen. Question number 30 we all are starting. Now this is exactly same as one of the questions that you all had done yesterday. Okay. So there is nothing for me to be speaking except just trying to be reading the question. Yesterday, I'll tell you the question number also. There was one question whereby we all had done fixed overheads and variable overheads both. Okay. Not like today's question. Yesterday, this particular question. We had been given the data of fixed overheads as well as the data of variable overheads. We found out those particular things separately. If separate data is given, we'll do them in a separate way only. So question number 30 is going to be that particular thing only. Okay. So read it. The following information was obtained from the records of a manufacturing company using standard costing system. Okay. Standard data, actual data, production. We had thought we'll be making this much. We made this much. Okay. Working days 20, 21. Machine hours 8,000, 7,800. Fixed overheads was this much. Okay. And variable overheads was this much. Okay. You'll tell me first of all, variable overheads are dependent upon what? Output. Can we say for variable overheads, standard data might be given for 4,000 units, but ultimately we'll be making a revised standard for 3,800, no?
Yes, sir.
Okay. And for fixed overheads, I guess fixed overheads are dependent upon period. Okay. Can we say if nothing is told about period, which I really believe is not given? I don't think so anything is given about the period, no? It might be say a data for a month. I'm trying to guess it because number of working days are 20 and 21. So it could be the data for a month. So in any case, if the data is not given, it must be of the same period only. Is that all okay? So just a sec. So for variable overheads, it is 4,000 units, but you will make a revised standard for 3,800. Okay, that is one thing. Apart from that, this data, we don't know the period. So therefore, we will be writing same period. And for this, whatever data is given, all those particular things, directly you can try to be posting. You can start away with the things. I'm asking you all, how much time do you think you're going to be taking for this question?
5 minutes.
Okay, so over exaggeration. I will give you in this case, if you'll say 5 minutes, then you will take 8 minutes. Your personal efficiency variance will always be adverse. Okay, so you'll do one thing, take 7 minutes. Take 8 minutes. Please start. Now keep your wordings at least. And compute all your variances. All your, no writing the formula, that's all okay. But this is all a regular question. all the variances which we all had done yesterday, exactly the same particular thing. Please start, please finish. Have you all finished?
No, sir.
So that is what I told right in the beginning. Three minutes more I am giving. Please finish. On the verge of finishing? Cartoons?
Yes, sir. Calculating last one.
Done, sir.
Variable overheads are all okay? 6,000 adverse, 3,000 adverse, 3,000. That's fine.
Yes, sir.
Okay. For fixed overheads, just a sec. I'll solve like this one here. 4 lakhs upon 4,000, 100, 3 lakh 50. 10,000 adverse, then 10,000 favorable, then 4,000, 2,000, 200, 200 into 10. 20,000 adverse, capacity utilization, 200 hours, 4 lakhs, 10,000 adverse, no? Gross capacity?
Yes, sir.
Calendar, 1 day,
20,000
4
favorite.
4 lakhs upon 20, yeah, 20,000 favorable,
30,000.
30,000 adverse,
10,000 adverse.
10,000 adverse. Job done. Till 31, it is all done. Okay, 32 question. A company has a normal capacity. Absorption rates are based upon normal capacity. Working 8 hours per day of 25 days in a month. Okay. Fixed overheads are budgeted at 1,44,000 per month. Okay. Standard time required to manufacture 1 unit is 4 hours. In April, company worked 24 days of 840 machine hours per day and produced 5305 units of output. Actual fixed overheads were 1,42,000. Compute expenditure variance, okay, volume variance, total fixed overheads variance, okay, and write down one other thing for time pass. Write down fourth FOH efficiency variance. So you do not do all the variances, only do these 4 variances. Okay. Now, fixed overheads are dependent upon period. In this question, what is the period, beta?
1 month.
1 month. I guess this thing is given for 1 month. So you all do one thing. Make your fixed overheads format. And obviously in standard and actual, in bracket, we are going to be writing 1 month. Write down 1 month. Okay, make this format, and I have not asked you these variances. I have asked you first 3 variances, and I have asked you fixed overheads efficiency variance. So fit in your data in this. Don't start away with the variances. I'm giving you all 3 minutes for that part only. Just try to fit in the data. That is more important. Try to fit in the data. In exams, you will never ever face a problem actually of calculation of the variances. The same thing in every question. Yeah? Nothing so great in that. But greatness is trying to be completing the format first.
Done, sir.
Okay. Just a minute. Time over. Listen. A company had a normal capacity of 120 machines working 8 hours per day of 25 days in a month. So therefore, in 1 month, there should have been 25 working days. Okay, the fixed overheads are budgeted at 1,44,000. Okay, 1,44,000. Sorry. 1,44,000. Okay. Standard time required to manufacture 1 unit of the product is 4 hours. Can you say to everybody, beta 4 hours will be coming here, no?
Yes.
1 unit should have taken 4 hours. Again. In April, the company worked for 24 days. So therefore, this figure is 24 days of 840 machine hours per day. Okay, and produce 5305 units of output. So therefore, 5305 was actual output. Actual fixed overheads were 1,42,000. So 1,42,000. Okay. That's it. Now, obviously, I have not got the information of hours. Can we say information of hours? This particular figure, 120 machines had to be working for 8 hours a day into 25 days, no?
Yes, sir.
So therefore, 120 into 200. This is 24,000. That's okay?
Yes, sir.
Okay. Put an asterisk over here and show in the terrace somewhere. How did this particular figure come? 120 machines into 8 hours per day into 25. Put a double asterisk over here. Now what those guys have told, company actually worked for 24 days. Okay, so in reality it was 24 days. Okay, of 840 hours per day. Can we say instead of giving this data and this data separately, they have multiplied the actual data and given us 840, no, directly.
Yes, sir.
they have given you in this case 840 hours per day. So therefore 840 must be number of machines into number of hours per day, but obviously the actual data. So therefore 840 into 24 will be giving you 20,160. Okay, one other information that we all obviously can be getting now, 24,000 hours we had thought we will be working. Every unit should have taken 4 hours. So kindly divide, that will be coming as 6,000. Job done, you find out your variances. Quickly please. 4 variances, I am giving you all 3 minutes. This is 14,680 adverse, correct? 2,000 favorable, 16,680 adverse, and just a sec, 5305 into 4 minus 20,160 into 6,360, na? Correct? Favorable, no? $5,305 into 4 hours minus 20,160 into 6 rupees. Done, beta, everybody? Okay, listen. So go over to your next question, question number 33. Now these are again actually super easy questions here. Can we all do one thing? We all will be making the format for the next 4 questions quickly. Okay. Then in that case, you start to be computing all the variances, and we will only do whatever is required now, no extra part. Okay. I'll not try to force you all to do anything extra as such. Okay. Whatever is there in the question, so only that much. Listen. Question number 33. Following information is available from the records of a factory. Budgeted data, actual data. Fixed overheads for June, 10,000, 12,000. Okay. Production in June 2023. Okay. Standard time per unit, actual hours work. So therefore fixed overheads is given, production is given. And this is the data for June. So therefore for 1 month. Calculate fixed overheads variance, expenditure variance, volume variance. Can you say for all these variances, we don't even require hours and days, no? Correct, no?
Yes, sir.
Okay, and so therefore this is the only information that we all require also here, okay, which is directly given to you. Okay, so you all write down now as soon as possible. ASAP. Write down. Question number 33. Budget, actual, write down 1 month, fixed overheads, output in units. Directly you have the information, boss, just copy here. 10,000, 2,000, 12,000, 2,100. Absorption rate, only one you require. That will be rupees 5, no? Do one thing, this question you finish it off right now. Only 3 variances are asked here. You all finish it off. I'll start to be making the next format. And there also exactly 3 things, same 3 things are to be done. So finish off the 3 variances. Then make the format for question number 34. Is this done?
Yes.
Make the format for the next question. Tally your 3 variances I have written on the screen. Done, beta?
Yes, sir.
Okay, listen. Question number 34. Actually, I would always want that we make a complete format, although we compute only the variances that have been asked. Okay. So we'll see that. Chalo. If you'll want me to be writing the extra data, I'll write it, but not of much use, because those guys have again asked actually these 3 variances only. The following data has been collected from cost records of a unit for computing the various fixed storage variances for the period. Okay. So what data is there? Number of budgeted working days. You will do one thing. Listen. In some other colored pen, no, just write down this information also. Although it will be of no use because you are only asked first 3 variances, but just I want to be writing it. So therefore there is no issue. If ever those guys ask you all the variances, at least you should be having the data with you. Okay. So number of budgeted working days 25. Budgeted man hours per day 6000. Okay. These are man hours per day, beta. Output budgeted per man hour in units 1. Now what does this mean? It means that in 1 man hour you should have produced how many units here? 1 unit. Further, fixed overheads cost as budgeted 1,50,000. I guess this was completely your budgeted data, now your actual data. Actual number of working days 27. Actual man hours per day 6,300. Output per man hour 0.9. Actual fixed overheads 1,56,000. Okay. Calculate now those 3 variances only. So technically you don't require that information of days and hours, but then I'm just writing it, although it will not be of much use for calculation of the variances. So I'm writing all simplest things. Fixed overheads 1,50,000. $1,56,000. Now just one thing, fixed overheads are dependent upon period. I guess again this particular question must be of a month only, because the number of days are 25 and 27, but in any case if it is not given, we'll just write down over here same period. Then output in units, I'll see that in just a while. Number of days 25, 27. Now budgeted man hours per day 6,000. I'm asking you, think before you will reply. Will 6,000 come over here?
No, sir.
No, beta, 6,000 hours are per day. Can we say number of hours? These should be number of hours for the entire period. Can you say it will be 25 into 6,000? No?
Yes.
Okay, so write down over here 1,50,000. In reality, it was 27 into 6,300. One 100, no?
Yes.
Further, last. Output per man hour budgeted. So in 1 hour, we should have produced 1 unit. So can we say in 1.5 lakh hours, we should have produced 1.5 lakh units, no? 1,50,000.
Yes, sir.
Further, in reality, tell me how much output we gave per man hour?
0.9.
0.9. So therefore, these many units and in every, these many hours, and in every hour we produce 0.9 units. So therefore, 170,100 into 0.9. This figure will be 153,090. Just do one thing, put one asterisk over here, put double asterisk over here. 1,50,000 hours into 1 unit per hour. 153,090 into 0.9 per hour into 0.9 units per hour, you all write down. Now, sorry. 170,100. Now, you just require beta this much amount of data. Okay, whatever I am highlighting, the other informations you don't require for variances. So 1 unit is equal to rupee 1, no? This upon this. Finish off your first 3 variances, please. Okay. Now, last time you told me something that you will do it, but you did not do it. Okay, now try to be proving your word. Question number 35. As well as question number 36. Question number 36 is same as the current question, only 3 variances are asked, and for that actually the data is directly there, fixed overheads and output. So only 3 variances are there. In 35 you have to be doing your calculate overhead variances. So all your variable overhead variances and all your fixed overheads. You all have done yesterday one question like that and today one question like that. I am giving you all 10 minutes for this and 3 minutes for this. So in all 13 minutes plus 2 minutes of inefficiency time to you all. In 15 minutes, please finish off whatever might happen. 35 and 36, please. Start. Once your this is done, make this format and keep please for question number 37. Question number 36 variances are fine. 36 I have written. 35 I'll take a while to be doing. Please just check 35th question. Variable overheads are these are the variances?
Yes, sir.
Okay.
favorable, 2,700 favorable, 750 at goal.
Please take your variances, please. This format is made, beta.
Yes, sir. Yes.
Okay, listen. Do it fast. Done. Listen. Now, before I'll do the last question, no, last question is only about ratios and nothing else. It's not variances, it is only ratios. Okay. You all have done fixed overheads. First question that we all did was on ratios only, in fact. Okay, so we are going to be doing almost the same style of a question, but just one small thing. And that I can try to demonstrate for any question that I have done since yesterday. But for that, you'll have to recall something. You know, first in labor, we all had done, if you all remember, 2 questions and one extra of the homework I made you all solve also, whereby we had expressed output in form of standard hours. Do you all remember that? We had expressed output in form of standard hours. We did that particular question. Okay, that was in your books in case you all want to be seeing question number 15, 16, 17. Those were the 3 questions that were there. Now, obviously, that concept actually applies to everything that we all do. That can be applied to fixed overheads also. In fixed overheads also, you have expressed output in form of units. You can express it in form of standard hours. That is your wish. Answers, everything will be coming same only. There will be no difference. So, what we'll do, come out to question number 23 in your notebooks only, please. In your notebooks only. Deliberately at some places I had left 119, so therefore I can make you all write down this particular thing. You will have written output in units. Below that you will be having one line blank as per me. You can write down output in standard hours. Listen. You are on to question number 23, right? You are on question number 23? Okay, listen. Now, in 1 year, workers should have made 25,000 units. Can we say making 25,000 units was supposed to be the job of 1,25,000 hours here? How did you know, sir? 25,000 units, every unit should have taken 5 hours. So, therefore, I can tell my workers in this year make 25,000 units, or I can try to tell them do the job of 1,25,000 hours. Both these lines exactly mean the same damn thing, no?
Yes.
Beta, producing 25,000 units is same as working for 1,25,000 hours. So, therefore, you all can write down 1,25,000. If you have a colored pen, use that. That will be better. Now, further. But obviously, this data will not come over here. Never. Tell me, my workers had actually produced how many units? 25,500. Can we say 25,500 was equal to job of how many hours? Please take your calci.
1,27,500.
Yeah, 25,500 into 5 hours. So, therefore, 127,500. Now, you are going to be seeing this particular data and you are going to be filling up the blanks, whatever I am saying. Same thing I made you all do in labor also. My workers worked for how many hours?
1,27,500.
120 to 500 hours. But by working for 120 to 500 hours, they gave an output of how much? 127 500 hours. Is that all okay? Now one thing, beta, this data and this data will always be same only. Why? Because this is standard data. Standard data is perfect. If you want to be thinking, you can always think again. By working for 1,25,000 hours, how much output you should have given? Sir, 1,25,000 hours only. No, if you work for 1,25,000 hours, you should give an output of 1,25,000 hours. But in reality, workers can obviously be efficient or inefficient. So therefore, by working for these many hours, they have given this much output. You can do this thing for every question. And even if suppose, now if you cut out this, no, don't cut it, but in case you cut it out, and you use this particular data for calculation of every variance will be same only. To give you one demonstration, total fixed overheads cost variance, absorbed amount. Absorbed amount will be this figure. Now this is output in standard hours. So obviously I'll multiply by rate per hour. Please take your calci, do 127 500 into 0.8. It should be coming to 1,02,000 only. Please do it.
Yes, sir.
So instead of writing output in units into absorption rate per unit, you can write down output in standard hours into absorption rate per hour. Okay, so therefore answers will be coming same. Let's do that for 2 or 3 questions, then we'll come back to the current question that you all are doing. So 23rd question, we all did that. Let's try that for 24th question also. There also, I guess you all will be having one line. I think so. In case you don't have, you can just squeeze it in middle. You will write down over here output in standard hours. Now, output in standard hours, output in standard hours. You tell me 2 numbers please. One over here, one over here. One is super easy. Directly you all can try to be saying. 5,000. This data comes from here only. Nothing to be thinking also. Tell me the other data.
4,600.
4,600. Workers produce 2,300 units. I am talking to the workers. I tell them you all have made 2,300 units, or I can try to tell them you have done the job of 4,600 hours. Although it's a separate thing, for the output which should have taken 4,600 hours, workers actually took 5,700 hours. You all understood this?
Yes.
I am just trying to be expressing output in form of standard hours. So this output is of how many hours? So that is the only thing you got to be thinking. So multiply by this, your job gets done. Okay, so some other question in case you all want to be trying. I guess next question is of the same particular type. I will not try that only. Wherever we'll have place, I'll try that here. Do you have place below this particular question? This was question number 28. You all can fit in a line over here. Is that fine? Is that fine, beta? Okay, so write down over here output in standard hours. So, output in standard hours, output in standard hours. Tell me the first number.
20.
20. This data only comes over here. But now, producing 600 units was the job of, please do 600 into 20 divided by 700. 17.14 hours. That's enough. You all have had enough practice now. Okay, so let's do this particular question now. Question number 37. Read. Following data is available for DKGN company. Standard working hours 8 hours per day of 5 days per week. Okay. So those guys working days are 5 days per week. Okay, fine. Maximum capacity 50 employees, what I'm saying. Actual working 40 employees. Okay. Actual hours expected to be worked per 4 weeks. Standard hours expected to be earned per 4 weeks. Actual hours worked in 4 weeks. Standard hours earned in 4 weeks. You're going to be having a tough time. The related period is of 4 weeks. In this period, there was one special holiday due to a national event. Compute the following ratios. We will compute all these ratios. All these ratios are almost the same ratios that we all did in our first question on fixed overheads also. But if you all remember, for some of the ratios, you also required practical capacity, no? Correct, no? Okay, so do one thing. Below this particular format, no, you write down one extra time pass information that you will require in any case. Practical capacity is equal to. Now see, my job, no, is just calculation of ratio. So therefore, no variances. You all will understand. Then I do not require this fixed overheads part also. I am not here to be computing any variances, so I will not require that. Now, tell me one thing. These are ratios, I do understand. But can you say ratios are more or less derived from variances only, no? So, they are derived from fixed overheads variances. Fixed overheads are dependent upon period. Tell me in this question, what is your period, beta? Printed only in the question. Speak fast. I'll say 4 weeks over here. That information is given to you. 4 weeks. Now, I require 1, 2, 3, 4, 5, 6. But now you all will understand one thing. In this question, no, output will not be getting expressed in form of units. You can check. Is there any word called as unit in this entire question? No. So therefore, do one thing. Put question mark over here also and write down below this. Output in standard hours. That's why I made you practice 5 and 6. And practical capacity 7th. Now, before we all proceed, no, you all can try to tell me, how this 8,000 would have come, how this 6,400 would have come. Just try, no, you should be able to get it. Just check it up on your calci.
8,000 would have come as 8 hours into 5 days into 50 employees for 4 weeks.
Correct. So, in this case, no, everybody can be doing one thing. Against 8,000, no, these are standard hours expected to be earned per 4 weeks. It will be 8 hours per day right now into 5 days per week. So, can I say 8 hours per day into 5 days per week? This will give you the hours per week, no?
Yes, sir.
Multiply by 4 weeks. That will give you for 4 weeks. We are trying to be computing for 4 weeks. But can I say this entire data will be of one worker, no? And there are 50 workers like this. I guess now you will be able to get this data also. This is 8 into 5 into 4. You all can tell me further.
40.
Into 40. Now, you have got to tell me 6 numbers, beta. Use your brains properly. Easiest is this data and this data. Easiest. All others and practice. Some information you have directly, just that I want you all to be searching. Okay. So, you have got 6 informations. I give you all 4 minutes. Try in those particular 4 minutes. I have not started the timer only, but I believe 4 minutes are over. You all have done?
Yes, sir.
Okay. Now, at the end, somebody will have to tell me which person got all the numbers correct. We'll start away with the easiest numbers. Tell me days First, second. 20 and 19. How did 20 come? 4 weeks into 5 days per week. So 20. But in reality, there was a special holiday. So 20 minus 1, 19. Now, left are in this case these 4 informations. Okay. And this 5th one also. Okay. Now, now you'll have to tell me this. Can we say we got this information based upon this? This will be kind of your maximum or practical capacity, no?
Yes, sir.
Okay, so, and practical capacity doesn't come over here, beta. It does not come in your format. Okay, what comes in the format is normal capacity, no? Correct, no?
Yes, sir.
So, therefore, this is 8,000 hours. We could have had 50 employees. Okay, could have had maximum. But obviously, I think we wish to be having, or in reality, we only had how many employees here? 40. Now, see, actual hours expected, standard hours expected. Can we say this data has to be your budgeted data, no? Although somebody can be saying, sir, why they use the word actual? I think what they mean by this particular line is, in 4 weeks, they wanted actual hours to be this much. You understood this?
Yes, sir.
But this is still the budgeted data, no?
Yes.
Yes.
Okay, so therefore 6,400. This is also, you can write down your normal capacity. Okay. Now tell me 6,400 will be coming at another place also. You will have done 5 practice questions right now only. Output in standard hours 6,400. Further, actual hours worked during the 4 weeks. Tell me this 6,000 will be coming where? Actual hours worked during the 4 weeks. Actual hours work, no, how much more those guys will be here. So 6,000 will be coming there. Standard hours earned in these 4 weeks means we produced an output. The standard hours of which required are 7,000. That means we produced an output of 7,000 standard hours. Is this all okay?
Yes, sir.
So 7,000 will be coming over here. I don't think we require any absorption rate also. Now, we are going to be doing one thing. We are going to be writing names of all the things that we have to be finding out in the same order. We might solve it in our order, but I want to be writing it in the same order. Efficiency ratio, leave 3 lines. Activity ratio. Leave 3 lines. Calendar ratio, leave 3 lines. Standard capacity usage ratio, fifth, actual capacity usage ratio, sixth, actual, this long name, usage of budgeted capacity ratio, long name. Now, for some reason, no, I'll start away with the last one. Okay, just like that only. I'll do last 3 ratios, which are slightly independent ones. And I'm looking forward for question number 23. The first question that we all have done of this particular type. Okay, so Oh, I had deleted that. Okay. You have in your notebooks, you try to tell me the formulas, that will be better. So go back to your question number 23. Actual usage, although you can get this particular thing from the name also, yaar. Actual usage of budgeted capacity ratio. Can we say this will be nothing but? You check your formula, please. Question number 23. Please check fast. Actual hours worked divided by normal capacity into 100. Now, kindly tell me the numbers from this particular question. Tell me, actual hours worked are how much?
6,000.
Everybody, 6,000. Come on, last question for the day. Come on. Divided by normal capacity. How much?
8,000. 6,400.
6,400. What is 8,000? Practical capacity. We want normal capacity. So 6,000. 93.75%. Then, fifth one. Go back to your formulas. Actual capacity usage ratio. I know the formulas. I want you all to look behind and try to tell me. Actual capacity usage ratio will be what? Actual hours work divided by practical capacity into 100. This will be 6,000 divided by 8,000, no? Into 100. 75%. Then, standard capacity usage ratio. This is normal capacity upon practical capacity into 100. 6,400 upon 8,000, 75%. Sorry, 80%. Sorry. Further. Now see, these three ratios which are left, no, these are derived from variances only. I'll do the easier one, calendar ratio. So, calendar ratio. If you want to be using your variances, you all can. Tell me if I was trying to be computing variances, then calendar variance will be adverse or favorable? Adverse. So, numerator will be smaller, no? So, formula, in case you all don't want to be seeing behind, we all made formulas by ourselves only here. That will be nothing but actual days upon standard days into 100. 19 upon 20 into 100, 95%. Then, I don't require practical capacity now. Further, two things. Activity ratio, I am doing first. Activity ratio is actually your volume ratio only. Now, tell me. I don't want to be looking behind, therefore I am asking you all. If I was doing volume variance, you should have produced this much output. You produced this much output. Tell me, variance would have been adverse or favorable? Favorable. So, numerator will be bigger, right? So, therefore, you can write down actual output divided by budgeted output into 100. Last, efficiency ratio. Now, just for some reason I wanted to do it last. I know that I don't have output in units, but you all can think and you can tell me. Are workers efficient or inefficient? Only look at the numbers that I have highlighted. Actually, these are the only two numbers that you require also. Are workers efficient or inefficient?
Efficient.
Efficient. How do we try to be thinking that? Okay. We always think like this. For this much output, how many hours workers should have taken and how many hours they have taken, right? That is how we all try to be doing the things. Tell me, don't touch calci. For producing 7,000 hours of output, common sense, how many hours workers should have taken? 7,000. And how many hours did they actually take? 6,000. They are efficient, no? If they are efficient, numerator will be bigger. Okay. I don't know the formula, but I know that 7,000 will be coming on top, divided by 6,000 into 100. That's my answer. You can write down your answer first. And then we'll make the formula. We are the greatest people on this earth. In reality, beta, we used logic. We converted that into a formula. Obviously. I say should not give any formulas also. I think it is a stupidity. But then in any case, now we will start to be writing. 6,000 are actual hours worked. 7,000 are standard hours for actual output. I didn't require any absorption rate also. I just made the format just like that. In exams, if you can solve the question without the formats, I'm all okay, please. Okay, it's all fine. It is nowhere it has been told you got to be making the formats. I see most of the times don't even make it. We just try to be making it, so therefore the things are there in a standard form. Okay. Now, with that, this part is altogether done.